This was one of those weeks when news about the economy and money just left you with a lot to kind of sink in, including the news that one of the big credit rating agencies had downgraded the United States government as a credit risk. There's also a big period of earnings numbers coming in. So some thoughts on that from Ernie Burns with Burns Financial. Good morning to you.
Good morning.
Let's start earnings first of all.
Yeah.
Somebody might look at an earnings report and say, oh, they made money, so their stock should be fine, right?
Right. And that's not always the case. So you have, for example, in the last week, we've had Amazon come out yesterday with great earnings, excelled earnings, and the stock's doing really well. Elf came out last week, doing excelled earnings, stock's doing really well. Apple came out with disappointing revenue, but beat earnings, and the stock's doing mixed.
I know you're not going to tell us what stock to pick and that sort of thing, but there's been a kind of a romance with anything AI. Companies almost put AI into their business model and say, oh, and their stock price will get some sort of bump. Is that starting to wear off a little bit? Are people getting more savvy about what company has a real advantage because of AI and what doesn't?
A little bit more savvy, but those companies that are still introduced to it right now, semiconductors, like for example, NVIDIA, Taiwan, Broadcom, and then you have Microsoft, Apple. These stocks, Google, Amazon, are going to do really, really well. Like Amazon blew out earnings. So because of AI, it's just going to keep excelling. It's not slowing down right now.
All right, you point out the next big date to mark is next week when we'll have the latest report on inflation.
Right. August 10th next week, the CPI number comes out. We expect it to drop again because our expectations and what we've seen in the past is this. Inflation was actually higher than what the government was actually saying, and now it's dropping faster than the government's actually saying. So I think it's going to be 12 months in a row. It's going to report next week. Now, if the numbers come out, here's some tricky things. If the numbers come out which expectations are met, then you won't see a big change in the market. But if we see price of goods going up, then you will see the market fall from it. But if
in the anticipation that would affect profits and also the Fed raising interest rates.
That's right.
Gotcha.
That's right. And now, right now, we believe that the Feds will stop for the year, but we'll see. I could get bid on that. But I think they've paused for the rest of the year. What I think will happen is next year they're not going to be lowering rates anytime soon. But we'll see. That's way in the future. But next week's expectations, the CPI should be going down for a straight 12 months in a row, which would be nice.
People are familiar with the name S&P. They're familiar with Moody's, a lot of people. Fitch probably doesn't have the name recognition of some of the other ratings agencies. Right. But nevertheless, in financial circles, it gets watched. And Fitch this week says, you're no longer AAA America, you're AA plus. What are your thoughts?
Well, think about this. Well, my thoughts are exactly that. They're not recognizing Fitch as much. It went to AAA to AA plus. AM Best did the same thing a little over 10 years ago, and look what the market did afterwards. It just sailed up. The credit ratings of the United States are still AAA by Moody's and AA plus by AM Best and Fitch. So our expectation is this could be a buying opportunity right now for the long term.
Even though the market's really kind of climbed pretty aggressively here.
Yes, it's not.
You said long term.
Long term. From the market itself, for it going down 300 to 400 points in each category of each index was a buying opportunity long term.
Okay, Ernie Burns, thanks as always, Ernie.
Right,
appreciate it.